Hi lads, how's it going? Um, this video is the 2012 DEB pre-paper. It is question one and it is the company account. What I'm going to do is I'm going to look at the question. I'm going to go through all the workings to make sure we have all the figures and then we'll look at the answer. Okay, so let's get going. So question is on the page here in front of you. I'd say have your papers in front of you as well and your question. So up the top we have authorised capital, issued capital, and 800,000 preference shares. Nothing strange there. Buildings at cost. Delivery vans cost 260, now 180, so that's accumulated depreciation of, let's see, 80,000. Discount, now it's on that side, so it's received. Profit and loss is on the debit side, so that means we're going to be taking it away. It was a loss, so it was a loss. Opening stock, debenture for 3 months, 9% investments. It was at the first of the first, so it's a full year. Patents, 4 months investment income. Purchase sales, interim dividends for 6 months. It's going to be half and half for preference. Bad debt provision, nothing else. 8% debentures, nothing else strange there. Just be aware advertising is your suspense account, and the usual. We have 7 notes here. We're asked to prepare a trading profit and loss for 75 marks and a balance sheet for 45. So let's get going with the notes. Note 1, stock at 31st of the 12th, 2011 at cost was 73,800. This figure includes damaged stock which cost 59 but which now has a value of 32. So it has lost money. So it's going to be the 73,800 less, what have we lost? So 5900 take away 3200 is the net loss. So that's going to give us 71,100. Two places that goes. It goes in the trading account and it is a current asset. I'm going to put that in red. Anything that I'm going to use, and I'm going to put a circle around it as well. You can highlight it, you can do whatever you want. That's what I'm going to do. Okay, there's our first figure. That might change as we go along the question, but that's what it is for now. Working 2 is the patents note. Patents which incorporated 4 months investment income are to be written off over a 5-year period commencing 2011. So I go back to the trial balance and I get the patents opening balance, which in this case is, so this is my patents account, and the opening balance is on the debit side and it is 36,800. Okay, that's the first thing I do. Over here on the right, I'm going to work out the investment interest. Excuse my spelling. Interest. Okay, so first of all, I'm going to do for the year. So if I go back to the question, investment interest for the year, 9% investments on 240,000. So 9% of 240,000 equals 21,600. Okay, I'm going to take away 4 months. 4 months. So whatever way you want to do that, you can do 240,000 times 9% times 4 over 12, and you get 7,200, which gives us what's due. So investment interest due is the difference between these two, is 14,400. So this figure is our investment interest for the year. This figure here is our investment interest due. This figure here is in the P&L appropriation. This figure here is balance sheet current asset. So I'll put both of those in red. And I'm just going to circle them. I'm going to circle that. So that's the investment interest dealt with. Now over to patents. We're going to take this figure here, the 7,200. So the 7,200 goes over here. 7,200. Call it investment interest. Okay, so now we have the real patents figure. So I'm just going to balance this account, or I'm just going to add up what should the patents be. So if I add the two of those together, I get my patent figure is 44,000. It tells me up here written off over a 5-year period. So down here, 44,000 divided by 5 equals 8,800 every year written off. So I'm going to put that up here. P and L, that's 8,800 written off. So now I'm just going to balance this account to find out my patents figure for the balance sheet. So we add up both sides, big number goes on both sides, difference goes above the small side and below the big side, and the difference is, in this one, 35,200 is the figure I'm looking for. So the figure I'm going to highlight is this figure here, the 8,800, is called patent written off, and that is a admin expense. Put that in red. And down here, my 35,200 is my intangible asset, intangible fixed asset, patents. Okay, so circle that. Patent written off, patent in the balance sheet. Note 3, my delivery vans. So I'm just going to get myself a T account here. I'm going to copy it a few times. So remember, we're looking for 5 figures here. And okay, I'm going to do one down here as well. Okay, so the usual ones are, in this case it's delivery vans, depreciation, disposal, and just check. The check for the net amount of the transaction was incorrectly treated as a purchase of trading stock, so purchases. So remember, I'm looking for 5 figures. I'm looking for the new delivery vans figure, depreciation for the year, accumulated depreciation, did I make a profit or loss on disposal, and a new purchases figure. So first of all, I'm going to take all the balances from the trial balance. So the delivery vans figure from the trial balance, it's the cost figure, 260,000. The depreciation opening balance I did a second ago, the difference between cost and net book value, 80,000. The disposal is a new account, and the purchases figure, the opening balance for it from the trial balance is 1145000. Okay, so first thing, back up here. Delivery vans 15% per year. On the 31st of the 3rd, a delivery van which cost 36,000 was traded in against one which cost 42. So first of all, disposal here, the old van was 36,000. So we credit delivery vans, we debit disposal account. Okay, that's a double entry transaction. When we dispose of an asset, we also have to dispose of its depreciation. So that's what I'm going to work out now. I'm going to count the months. So as you can see up here, The van was bought in the 30th of June 2005 and sold 31st of the 3rd 2011. So 2005, 6 months. Then we had it 2006, 2007, 2008, 2009, 2010, and then in 2011 we had it for 3 months. So each of these years it was 12 months, the whole year. So quick calculation, 69 months worth of depreciation I'm going to have to work out here. So I'll do it over here. 36,000 multiplied by 15% is 0.15 divided by 12 will give me for 1 year, multiplied by 69 will give me the whole thing. Okay, I didn't put an equal sign in. And the figure it's given me is 31050. So that figure there is going to go here. Disposal 31050, and down here we'll call it depreciation 31050. Remember the double entry rules. If you debit here, you credit. Oh, sorry, that's the wrong place. Should have been disposal account. My mistake. The disposal account credit. Okay, so we debit the depreciation, we credit the disposal. Next thing mentioned was traded in against a new van which cost 42. An allowance of 6,000 was given on the old van. So delivery vans, debit, allowance. £6,000, and credit that in a disposal account. 6,000. Okay, so that's the next thing you do. And finally, the check for the net amount of the transaction. So the van cost 42, but you were given a trade-in allowance of 6. So how much did you pay? 36,000. So bank 36,000. And then this is our mistake. It was treated as a purchase of trading stock. So here we credit 36,000 here. Okay, so now I can balance a few of these accounts. So first of all, I'll just deal with the purchases and get it out of the way. So we only have 2 figures, so basically it's going to be that figure minus that figure. That is our purchases figure in the trading account at the moment. Now that may change as we go through the question, but at the moment that is the purchases figure in the trading account. I got to the disposal account. We have, if you think about it logically, the van cost 36. If you depreciated it by 31050, so 36,000 minus 31050, the van was worth 4,950. They gave us though 6,000. They gave us 6,000. So the balance is going to go here, and the balance is going to be a profit of whatever the difference is. So if I just added these up, it'd be 37,050, 37,050. So the difference, I'll just put lines here just to make it look properly. Here, the difference between 37,050 and 36 is 1,050. That is a profit on disposal of 1,050, and that's obviously going to go in as a gain. A gain or another income. If it was on this side, it would be a loss, or sorry, an expense, but it's a gain. So that's 2 of the 5 figures. The next one we're going to do is over here. What's the new delivery vans figure? So add up both sides and put the big number on both sides. I can quite clearly see this is going to be the big number. So 302. The balance goes above the small side and below the big side. So carried down and brought down. So the balance is 1 minus 266,000. So that figure there is what I'm going to highlight in red. That is my balance sheet fixed asset figure for delivery vans. So that's my third figure that I am looking for. Again, I'm just going to double underline these. That's our okay. So now I have three figures. I'm looking for the profit and loss figure for depreciation, and I'll be looking for the accumulated depreciation figure as well, which I just know is going to go down there. So first of all, my profit and loss figure. For the first 3 months of the year, my vans were worth 260,000. For the remaining 9 months, my vans were worth 266,000. So over here at the side, I'm going to do, let's see, 260,000 multiplied by 15% multiplied by 3 over 12, and then I'm going to do 266,000 multiplied by 15% multiplied by 9 over 12 for the remaining time. So if I just do that calculation, okay, I'll undo that, I'll do it properly. So that will equal 260,000 multiplied by 0.15 multiplied by 3 over 12 gives me 9,750, and this one 266,000 multiplied by 15% multiplied by 9 over 12, 29,925. Add the two of those together and I get 39,695. 39,695. Okay, so that figure there, 39,675. So that is my figure for the P&L expense. So I'll balance this off now, add up both sides. Clearly this side is the bigger side. So that's going to be my balancing, and that's going to be my totals figure. My balance is going to be the difference between this number and this number. 88,625. So that number is going to be my accumulated depreciation in the balance sheet fixed asset. So P&L expense, depreciation on delivery vans, balance sheet accumulated depreciation. There's my 5 figures. Working number 4, suspense. So again, I'm going to get this T account and I'm going to copy it. I'm going to probably put 3 here because that's generally what it is. Okay, the suspense figure arises as a result of the incorrect figure for debenture interest. So I'm going to put debenture interest. Although the correct entry had been made in the bank account and discount received 320 was entered only in the creditors account. So discount received, so discount is going to be the other account, and then the third account you go back to the trial balance and you find which account has suspense next to it. I marked it earlier, it's this one, advertising. And I'm going to take that number, 21,800. So advertising, the balance is 21,800. The balance for discount was 12,400, and the debenture interest for the first 3 months, the balance was 4,000. I know that that's going to be wrong because it's told up here, incorrect figure for debenture interest. So the first thing I'm going to work out is what is the correct figure for debenture interest. So I go back to the trial balance, I find debentures, 8% debentures, 180,000. So 8% of 180,000 equals 180,000 times 0.08, 14,400. That is my figure for the year. Less, we are told 4 months, I think it was, wasn't it? If we go back to the trial balance, debenture interest for the first 3 months. 3 months has been paid. So less 3 months paid. So basically that divided by 4. 3,600 works out as 3 months. Another way to do it, that divided by 12 multiplied by 3 gives you the figure debenture interest due for the balance sheet. So that minus that gives you that. So these figures, this figure here and this figure here, are going to be our figures. So this one, P&L appropriation, debenture interest for the year. This one, balance sheet current liability, debenture interest due. Now, this figure is the correct figure for 3 months of debenture interest. Up here though, it's telling us 4,000. We know that is wrong. By the way, this is our suspense, so anything goes in here. So we know this is wrong. It has to be 3,600. How do we get it that way? We credit 400 here. That will make it 3,600. So if we credit here, we have to debit the suspense account. It's that simple. Now, I don't need this account anymore. Gone. Talking about discount, discount received of 320 was entered only in the creditors account. Now with discount, if you know your rules, this is allowed, this is received. So discount received wasn't entered. So we put the 320 here. If it goes on the credit side here, it goes on the debit side here. 320. So now what I need to do, I add the two of these numbers up, and I get 12,720. And if I add these up, I get 22520. Okay, so advertising is a S&D expense. This is discount received, so it is a gain or an other income. So 4 figures. Gain, selling and distribution expense, because that's what advertising's for. This is debenture interest for the year, and this is debenture interest due. That's it. Working number 5. During 2011, a storeroom burnt, which cost 32 in stock, cost 18 were destroyed by fire. A new store was built by the workers. The cost of their labour was treated as a business expense, and materials were taken from the firm's stocks. The insurance companies agreed to contribute 50 grand in compensation. Okay, I'm going to get a couple of T accounts again. Copy. So we're going to have a buildings account. We're going to have a cost of their labour, so that's going to be salaries and general expenses, and stocks is going to be purchases. So buildings, I'll just look at the trial balance. There's one called salaries and general expenses and purchases. So the buildings figure I'm going to take is the one from the trial balance, 760,000. The salaries and general expenses figure from the trial balance is 224,900. Now, the purchases figure I'm not going to take from the trial balance because in the previous, in note number 3, this was the purchases figure, 110,9000. So I'm going to score that out, but I'm going to take it here now. So 110,9,000. 110,9,000. There's going to be a new figure for purchases. So first of all, a storeroom which cost 32 and stock which cost 18. So we're going to take 32 away from buildings. We're going to take 18 away from purchases, first of all. Okay? Then, a new store was built by the firm's workers. The cost of their labour was 22, so we're going to add that on to buildings. The cost of their labour, so if we debit buildings, we credit salaries and general expenses. And materials costing 38,000, so again we add that on to buildings, 38,000. So we debit buildings, we credit purchases, 38,000. We also have the 50,000 compensation, so I'm just going to write that down here. The 50,000 compensation goes into the accounts as a current asset in the balance sheet. Current asset in the balance sheet. And that matches up with the storeroom and the stock. 32 and 18 is 50, so we're getting covered. There's no loss from the fire. So 50,000 current asset balance sheet. So we need to just balance these accounts now. So I'm just going to balance them all, add up both sides here. So 820,000. Our balance will be 788,000 for buildings. That is our fixed asset figure. I'm going to highlight that in red. I'm going to double underline these. Okay, so that's our figure for buildings, 788,000. Our salaries and general expenses, that's going to be that minus, undo that, it's going to be that minus that, and that's going to be a admin expense. Okay, so I'll circle that. And our new purchases figure, I'm going to balance this properly, so I'm going to add up both sides. Clearly that's a big number, so it's going to go in both places. The difference is going to go above the small side, which is going to be that minus that minus that. That figure there, which is going to come down here. And that is now our trading account figure for purchases. Unlikely to change again, but you never know. So that's purchases figure of 105,300. That's that note dealt with, 4 figures. Note number 6 is a bank reconciliation. So the first thing, always do the bank statement 26,480 and note number 3, 3,800. So it is an overdraft, and we have issued a check which hasn't presented. So our overdraft is going to increase. So bank statement is 26,480 overdrawn. We're going to add check not presented, because basically our overdraft is going to increase by 3,800. So this is going to be our figure for bank. It's going to be a current liability in the balance sheet because it's a bank overdraft. Bank overdraft. So that's the first thing I always do. And that's going to be my bank overdraft number, 30280. Now I'm going to do a bank reconciliation to make sure I can get that to match up and also to fix the other things. So over here, I'm going to get a few T accounts. And we'll put them down here. I'm going to have bank, and I'm going to have a couple more. Put one up here as well. Okay, so this one's going to be bank. I'm going to leave these ones blank for a minute. So I'm going to look at note 1. A check for 970 issued to a supplier had been entered in the books, cash book and ledger as 790. So I'm going to come back to the bank. First of all, I'm going to get the balance from the trial balance, and it is 32,500 on this side. 32,500 is our balance. Okay, this note 1, a check issued to a supplier entered wrong in the books. That's going to deal with creditors. Okay, so I need to get my creditors figure from the trial balance, which is 74,300. Now, what's happened? A check for 970 had been put in as 790. So really, our creditors have only been reduced by 790, whereas they should have been reduced by 970. So that's a difference of 180. Our bank balance has only gone down by 790. It should have gone down by 970. So it's got to go down by another 180. So basically, creditors, we're going to debit creditors 180, and we're going to credit bank, because we've debited here, we're going to credit bank 180. Okay, so if we balance this now, our creditors figure is going to go down by 180. It's going to be 74120. That's current liability in the balance sheet of 74120. 74120. Now, a credit transfer of 2,400 has been paid into the firm's bank account in behalf of a debtor who has recently been declared bankrupt. This represents 30 cent in a euro, so basically 30% of the debt. So two accounts I know we're going to need. We're going to need debtors, and we're going to need bad debts written off. So I'm going to get my debtors figure. I don't think we have used debtors, or have we? I'm just going to look back. We haven't done anything with the debtors account anywhere. So the debtors figure is going to come from the trial balance. It is 86,000. Opening balance. So a credit transfer of 2,400 has been paid into the bank account. So 2,400 paid into the bank account goes on the debit side. So I'm going to credit debtors 2,400. That's the 30%. So up here, I'm just going to make a note. 2,400 equals 30%. So what I'm looking to find out is 70%. 70% equals, and what am I going to do there? I'm going to go 2400 divided by 30, which would give me 1%, multiplied by 70 gives me, and that will give me 5,600 is the remainder of the debt which is being written off. So I'm going to take it away from debtors, 5,600, and I'm going to debit bad debts written off, 5,600. So firstly, this is going to be selling and distribution expense. That's going to be bad debts written off. debtors figure is going to be the balance of these. So I'm basically going to take a shortcut here. It's going to be 86,000 minus 2,400 minus 5,600. It's going to be 78,000 current asset. Okay, so I took a bit of a shortcut balancing that, but I still have all the figures, and I'm going to circle that. Okay. Then I'm just going to check my bank account here, so I'm actually going to balance this properly. So I'm going to add up both sides. I'm going to balance this properly, and I get 32,680 on both sides. The balance is the difference, which is 3280 on the credit side. That would be the figure. So once I have that balanced, this is just a check. Basically, if I look here, those two figures are the same, so I've done it right. That's my bank reconciliation. Both my figures match. So those are the figures I'm going to be using. Working number 7. So I've split this in two. I'm going to deal with the dividends first, and then I'm going to deal with the next bit. So dividends I always treat like this. I lay it out: preference, paid, preference due, total, and then I do ordinary, paid, ordinary, due, ordinary, total. So I always deal with the preference dividend first. So if I go back to the question, I'm dealing with this here. 6% preference shares of 200,000. Interim dividends are for 6 months, and so I'm going to deal with that. So basically, 6% of 200,000 gives me the year. So 6% of 200,000 will give me the total. 12,000 is my total. I know interim is 6 months, so this is going to be half and half. 6,000 paid, 6,000 due. Okay? That's my preference dividend figures. Now I go to the ordinary. If I look back to the interim dividends, this 54,000 right here is made up of preference and ordinary paid. I already know 6,000 is the preference. So the ordinary paid is that minus 6,000, which is 48,000. 48,000. Now I go to the ordinary total. So if I go to the note, it tells me ordinary shares will bring the total ordinary dividend to 10 cents per share. How many ordinary shares are there? I look down here. Always 760,000. So the ordinary total will be 760,000 multiplied by 10 cents. 76,000. Now I just work out the difference to get this number. 28,000 is my ordinary due. This is all the numbers I need. So I'm just going to write where these go. All these numbers. So this goes in the appropriation, 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 appropriation. So this is at the bottom of the P&L. I'll just show you now. Those four figures. Then the preference due and the ordinary due, they also go in as current liability, current liability. So if I just look here a second, I must plug in my computer. Okay, we're good to go. So if we just look at the answer for 2 seconds, you will see at the bottom of the P&L appropriation, we have it down here. I'll just highlight it in red. We have preference dividends paid, ordinary dividend paid, preference dividend proposed or due, ordinary dividends proposed. It doesn't matter which order it's laid out. I usually put preference dividend paid, preference dividend due, ordinary dividend paid, ordinary dividend due. It doesn't matter as long as those four numbers are there. Then over here in the current creditors amount falling due within 1 year, here's my preference dividend due and my ordinary dividend due. So 2, 4, 6, 8, 10, 12 marks, 10% of the whole test. Of the whole question, sorry. So that's part 1 and 2 of the last note. Now this bit, provision be made for both investment income and debenture interest due. Note number 2, there's investment interest due, it's done already. Note number 4, there's debenture interest due, it's done already. So I don't need to deal with that. Provision for bad debts be adjusted to 5% of debtors. So I'm just going to go back a few notes. My debtors figure is 78,000. So 5% of 78,000 equals 3,900. I look at my trial balance to find the figure here. Bad debt provision is 4,100 here, which is higher. So 3,900, which is a reduction of €200. A reduction of 200. I'm just going to write there. So 4,100 minus 3,900 equals 200. Just so you know where it's coming from. So it's a reduction of 200. So a reduction is good. That means that is a gain in the profit and loss. 200, and we call it reduction in bad debt provision. And this figure here, the 3,900, we're going to take that away from debtors in the balance sheet in the current assets section. That figure there. Okay, so 3,900 we will take away from 78,000, and we have a 200 gain reduction in provision for bad debts. The last bit, buildings to be depreciated by 2% of cost. So I must go back to this buildings figure, which is 788,000. So 788,000 multiplied by 2% gives me 788,000 multiplied by 0.02. 15,760. That figure there is my P&L expense, and it's also accumulated depreciation, because there was no accumulated depreciation given for that. So there are two figures, and that's it for the notes. Quick scan of the solution. So we have sales figure comes straight from the trial balance. Opening stock comes straight from the trial balance. We have worked out purchases. We have worked out closing stock. We have worked out patents, salaries. Directors' fees comes from the trial balance. Rent comes from the trial balance. We worked out depreciation on buildings. Bad debt written off, we worked out. Advertising, we worked out. Depreciation of delivery vans, we worked out. Moving down. Profit on sale of delivery van, we worked out. Discount, we worked out. Reduction in provision for bad debts, we worked out. We add on investment income, which we worked out. We take away debenture interest, which we worked out. We work out our dividends and we take them away. And remember, we take away the profit from last year. It was a loss, not a gain. And that gives us our final answer. Remember, that final answer goes over there. So for the balance sheet, We worked out this figure, we worked out this figure, we worked out this figure, and we worked out this figure. We also worked out this figure. This figure comes from the trial balance. Our current assets and current liabilities, we worked out the stock figure, we worked out investment income due, we worked out debtors, we worked out provision for bad debt, and we were given the insurance company figure. We worked out creditors, dividends due, we worked out debenture interest due, and we worked out the bank overdraft figure. Current assets minus current liabilities give us working capital. We add that on to that. There's our final answer. We are given this in the question, we are given this in the question, this in the question, this in the question, and this in the question. We worked this out over here. There's your final answer, which should match. That's it. I hope this helps, and all the best.